Well, BGC Partners releasing fourth quarter earnings on Friday, reporting strong revenue and earnings, better than expected, actually. Revenue up 18%, and given that volatility has returned to Wall Street, those numbers may go even higher next quarter. Howard Lutnick, the CEO of BGC Partners and Cantor Fitzgerald, says volatility can be good.
BGC is a marketplace company, so we don't make money when the markets go up. We don't lose any when it goes down. But when we win is when it's busy. So when you put in a headline on your show or in the New York Times, this is really good for the company. So the company loves volatility, and with volatility back, you know, the numbers of the company are just beautiful.
Yeah, we haven't seen volatility in a long time. I mean, even in this long, year and a half rally where we saw $8 trillion in market value gain, it was just no volatility. It was a very calm move. So first, talk to us about the quarter and the year that you just saw. You reported great earnings. I want to get your take on what you just saw in the last 3-month period and the year. And then I want to go into more about this volatility story because it's fascinating.
So the fourth quarter BGC, we earned 35 cents a share, which is the analysts were expecting about 29 cents. So that's a big gain over what the analysts were expecting. Superb numbers.
What drove it? Yeah.
Grew the revenues 15%, profits up 22% per share. So really first-class numbers across the board. And what happens is spreading our markets and spreading our wings to lots of different markets. The energy markets are great places to trade. Commodity markets, interest rates are now back, right? We're talking about the 10-year note going up. All these kind of markets all around the world, foreign exchange, things moving around. As long as they're moving around, it's good for business. And obviously, the last week has been spectacular for business. So we were expecting to continue that kind of growth, right? Revenues about, the middle of the range would be about 15% starting in the first quarter. And earnings, of course, more than that. But if you're going to give us days like Monday, Tuesday, and Wednesday, these things are going to just get better.
So what do you think this week tells us about volatility returning? I mean, is that what you're expecting, that this year is going to be full of wide swings and just lots of volatility since we haven't seen it in a long time? Does anything you saw this past week indicate that's going to continue?
Yeah, well, you had two big things happen, right? You had the tax cut. Right? You now have this quarter almost every company in America saying the tax cut has cost me money and my GAAP earnings for the fourth quarter are going to be down. But that means every quarter next year, every single quarter for every money-making company in America will be up. Every single one. And it's hard to imagine. How could we talk about every company making more money?
When you go from a tax rate of 40% to 21%, that's a really big deal for earnings.
It's incredible. Yeah. So you have every company is going to make more money, right? And then you offset that with, hey, the 10-year note is getting more expensive. Interest costs are going to get more expensive. All these companies have had really cheap money, but that's way offset by the tax cut. So what you have is a nice balance. But people can't really ingest that, right? What they've been waiting for is they've had low cost of money and sort of the market's just sort of what I called it melting upward, right? No one was really deeply convicted in the economy or deeply convicted in the stock market, but the stock market kept rising and rising and rising. Now you've got this adrenaline pump of a tax cut, and you have interest rates sort of creeping higher, and that's creating a dynamic that is going to move this market around, and it's going to make watching your show ever more important.
But does that mean that people should be worried about this? What's your take on interest rates and inflation? Are they back? Why are we so worried about 3% on the 10-year?
I don't think we should be worried about 3% on the 10-year. In 1987 and in 2007, if you looked outside, it was briefly sunny, right? In August of 87, it was really sunny. The stock market hitting new highs, right? And in 07, it was about the sevens, I guess. It was sunny outside, but you could see on the horizon huge black clouds with, lightning bolts and everything. And you would say, look, kids, we got to go inside. It's going to get nasty.
Yeah.
Right now, if you look on the horizon, blue skies.
Blue skies on the horizon.
No fear out there now. This concept of, oh my gosh, the 10-year could be 3%. Let's reset. Of course, does it matter if the Dow is 26,000 or 25,000? No, of course not. Today, of course not. But is something bad happening? Let me tell you, every country that matters in the world is growing. Can you imagine that?
Synchronized global growth for the first time in a long time. So you're talking about two things. You're talking about volatility and sort of technical type things, and then you're talking about a fundamental backdrop that is very strong.
Right. So you've got a very attractive fundamental underpinning, which means your country can't really screw it up because the whole world is growing, and therefore they'll buy your stuff.
Yeah.
The world is growing. So that's good for the market. But you've got interest rates rising, which we haven't seen for a long time. Right? You've got unemployment at 4%, and now it's going to start pulling people who haven't been looking for jobs back into the workforce. And what you're going to get is volatility, which is going to be spectacular for BGC's business. I mean, so for my public company, BGC, it's wonderful for their numbers. That's why they feel comfortable saying revenue is going to grow, in the middle of the range of 15%, and profits over 20% next year. This is really nice for a business. And, our yield, we have a big dividend, pay over 5%.
Right.
So it's
5% dividend. It's a very, very attractive story. So you make a good point. Large company. How do you grow a large company? Because when you get larger, doesn't the law of large numbers force you to slow down? So you took your real estate business public last year, mid-December. BGC Partners still own, the shareholders still own what, 50% of Newmark?
Actually, 90%.
90%. Tell me where that goes. Tell us about the impact of Newmark on BGC.
So within BGC, we built Newmark because BGC is a great brokerage company. And I think from the brokerage business, I am an expert at brokerage. So we went into the real estate brokerage business. That's selling buildings, financing buildings, and leasing buildings, right? That's our business. And off we went to build a spectacular business in Newmark. So Newmark did just under $1.6 billion in revenue. And now they're guiding over around $2 billion in revenue. So we'll grow between like 24-25% next year.
Wow.
Revenue growth.
In revenues, right.
Revenues.
And earnings even more.
And profits per share will grow 30%. In the middle of our range, I think everyone's expecting over 30% growth. And the way you grow that kind of business is just take the Wall Street data, the things that you're so used to. Real estate brokers have never seen before. They've never seen a company actually analyze the demographics of the kind of people who walk by the store. Know how much money do the people make who walk by your store.
That's good data.
What are the kind of things that they'd like to buy if you're a telecom company, right? And so what we did is we studied all of that, and we learned that the average price point that they'd want to spend in your store would be, let's say, $60. So restock your store with those kind of products. And they tried it, and their sales went up 12%.
Wow.
And that's how you get a 250-store client to say, okay, open stores for me everywhere because you know where to put them. It's taking Wall Street type analytics and data, giving that information to your brokers, and just making them so much smarter than everybody else that you're going to grow your business and you're going to win. The productivity of our people, just the same people, up 16% year on year. It's just feeding them data, making them partners with our clients.